We're now preparing for the second panel discussion for today, which is on ESG. The speakers are already here, and thanks for your patience waiting from the start of this webinar. Let me introduce them one by one. For the second panel, we have Ms. Chaoni Huang, Vice President and Secretary General, Hong Kong Green Finance Association. Mr. Bruno Lee, Regional Head of Retail Wealth Distribution, Wealth and Asset Management Asia, Manulife Investment Management Hong Kong Limited. Mr. James Robertson, Head of Asia, ex-China and Japan, Secretary Relations, Principles for Responsible Investment. Mr. Gabriel Wilson Otto, Head of Stewardship, Asia Pacific, BNP Paribas Asset Management. And Mr. Patney Wu, Partner, KPMG. Moderating this panel will be our colleague, Ms. Gloria Chan, Senior Manager, Policy Research, FSDC.
Thank you very much, Eunice.
Thank you.
Good afternoon, ladies and gentlemen. This is Gloria from the FSDC. Thank you for staying with us today for the second part of the webinar, which is on environmental, social, and governance, ESG. As you may have heard from the previous panel, family office and private wealth management experts have pointed out the increasing interest in ESG investment in their field. And in this session, we're very honored to have an impressive lineup of panelists to share with us their views around how ESG investment is a matter that we should all keep our eyes on. The panelists, I'm going to, before I start up with my list of questions I want to ask, perhaps I would just go through the list of panelists and ask them to give us a very brief introduction. First of all, we have Chaoni Huang, Ms. Chaoni Huang from Hong Kong Green Finance Association. Chaoni, please.
Thank you very much, Gloria, and many thanks to inviting me for the webinar. So I'm Chaoni Huang. I'm responsible for a few things at Hong Kong Green Finance Association with the support of the Secretariat and a very hands-on executive committee. So for Hong Kong Green Finance Association, we founded about 2 years ago with over 140 members now, mostly from the finance sector, banks, asset management, insurance company, as well as corporates. So we interact very actively with our members on a number of issues on sustainable finance.
Thank you, Chaoni. Next, we have two gentlemen from the asset management side. They are Mr. Bruno Lee from Manulife Investment Management, and also Mr. Gabriel Wilson also from BNP. Bruno, please.
Thank you, Gloria. Hi, everyone. Thank you very much for inviting me for this panel. I think my job, as Gloria has mentioned, is responsible for Manulife Investment Management's regional distribution. On top of that, this year, I'm also chairing the Hong Kong Investment Fund Association, and ESG or sustainable investment has been identified as one of the key development for our Vision 2025 report by our fellow fund managers. So I'll be more than happy to share with you in this panel about the trends and what are the challenges and opportunities.
Thanks, Bruno. And Gabriel, please.
Hi, thanks, Gloria. My name is Gabriel Wilson-Otto, and I head up the stewardship activities for BNP Paribas Asset Management in Asia Pacific. So that basically means spending a lot of time talking to companies we invest in, working with our investment teams, and working with regulators and policymakers to help shape constructive policy for our investments within the region.
Thanks, Gabriel. Further, we have the voice from the International Organization Principles for Responsible Investment, Mr. James Robertson. James, can you give us a brief introduction of yourself?
Hi there, good afternoon, and thank you for inviting me to speak on this panel session. I serve as the PRI's Head of Asia, ex-China, Japan. So this primarily includes working and engaging with the PRI's signatories or members across the region to help them on their ESG incorporation, working to engage with interested institutional investors, and helping to build capacity and awareness around responsible investment across the region, whether it's engaging with policymakers and stakeholders, industry associations, or other groups to help drive policy discussions and similar aspects.
Thanks a lot, James. Last but not least, we have Mr. Penny Wu from KPMG. He also is the leader of the working group on ESG of the FSDC. Pat, please.
Hi, thank you, Gloria. As Gloria mentioned, I'm a partner at KPMG, and I head up sustainable finance here in Hong Kong. I've been in sustainability for the past 13 plus years. Really, for the majority of that, nobody really wanted to talk too much about it. But now everybody wants to talk about it. So happy to share more.
Thanks, Pat. Thanks, everyone. I'm sure many of you will be as interested as I am in asking panelists the questions. So before I start with my list of questions, let me remind you that you can indeed type your questions through the Q&A function here. And I'll read out some of the selected questions from the poll towards the end of this panel discussion. So without further ado, to first set the scene as to where we are, where Hong Kong is, starting in terms of ESG investment, let me start by asking Pat the first question. Pat, as the leader of the FSDC working group on ESG, could you share with us how Hong Kong fares as an ESG investment hub in Asia? What have we achieved so far through different public policies, and what more do you think we can do?
Yeah, thank you. I think Hong Kong is faring well to become the investment hub of Asia. It is already the international financial center, and as Joseph has mentioned about, #1 in IPO fundraising, and we're now getting a lot of dual listings here in Hong Kong. I think that IFC status here is not going away anytime soon. And with that in view, the government and policymakers and regulators in the past year or so have been making a flurry of announcements stating their intention of making Hong Kong a green and sustainable finance hub. Just want to highlight a few of those. One of them is the development and the launch of that cross-agency steering group that Rocky mentioned that was announced in May. Where 7 different bodies, 7 different regulators and government bodies are coming together to build the market together. So rather than MA and SFC and Hong Kong Stock Exchange doing things separately, they're now doing it in a coordinated manner. And as one of the recommendations in our paper is really to develop that roadmap so that there is a kind of consistency and clarity of the direction of travel going forward that will be really important for practitioners going forward. The other one I would like to highlight is what the Hong Kong Stock Exchange has also announced in the sustainable and green exchange stage that was announced, I think, last month. This exchange just launched will also be another platform where there will be a lot more activity in this space. The final one I want to mention also is the Hong Kong Monetary Authority and the common reporting framework on green and sustainable banking that they have asked 50 licensed banks to fill out right now, and really kind of like putting it in that space of lending and how banks are making lending decisions and all of that. So with that in view, I think Hong Kong is really, saying loud and clear, we're moving in this direction. I think that is very clear in the market that this is here to stay, and sustainable finance is one of the key policy initiatives of this market. Now, in terms of what we can do a bit more here in Hong Kong, and I think that predominantly is, if I had to say one thing, is really capacity building. I just feel that it is in the past year or two that this whole ESG space has very much moved into the financial realm. So the asset managers, the bankers, the insurers, previously not really involved too much in this space, is now getting a lot more involved. and that the traditional finance professional may not have this part of their skill set. The ESG professional previously were more scientists and engineering-based type people. And that now we need that intersection of finance and ESG coming together. So that interlinkage of those skill sets will need to be developed in Hong Kong for us to be able to scale this into what we anticipate it to be.
Thanks, Pat. Just now you mentioned two very great points which I totally agree, which is on the capacity building for Hong Kong, and also that different parts in the public sector are moving towards building Hong Kong as an ESG hub, and coordinated policies around the public sector is definitely needed. So let me now turn to Chaoni, because you're from the Hong Kong Green Finance Association. Do you think industry associations in general can play a role in capacity building and also to push forward the policy coordination?
Absolutely. I think it's actually very important to have, industry association or the industry itself participating in the whole thing. Because if you think about, the great policies that, Pat highlight, the purpose is really to facilitate market development and is to accelerate, the behavior change when it comes to ESG integration among all kind of corporates and institutions across the board. So for associations like Hong Kong Green Finance Association, we are perfectly positioned to act as a bridge between the policymakers and the industry. So not only important for us to inform our members, across the finance sector, as well as some of the corporates, about the importance of all these policy developments. But very importantly is the participation and implementation. Pat mentioned about capacity building. So for industry association, I think our strength is that we can gather resources, from the public sector as well as from the private sector and talents to really leverage our efforts together. So for example, right now through the Greater Bay Green Finance Alliance, which was, initiated or jointly initiated by Hong Kong GFA as well as, our Greater Bay partners, we are now, really brainstorming cross-border carbon trading scheme and green building, efforts, right? So this and we have been working with Hong Kong MA, we have been working with Hong Kong TDC to really provide market access, in terms of sustainable investing opportunities, sustainable financing opportunities. So there are many things that we are doing, and we can actually do more because policymakers themselves cannot do it alone, the industry cannot do it alone, and we need all the key stakeholders work collaboratively, effectively to make the change as fast as possible. We don't have that many years, for if we need to meet the Paris Agreement, for example.
That's right. Thank you, Chaoni. What you and Pat has just shared with us is the very much on the public policy perspective. And next, I'd like to learn more about the investor perspective. We have Bruno and Gabriel here from the asset manager side. Gentlemen, different reports and studies are telling us that the global demand for ESG investment is growing exponentially. So based on your first-hand experience in the asset management sector, to what extent is this an accurate observation in Asia, and particularly in Hong Kong? How keen are your firms and your clients in doing ESG investment? Maybe I will start over to Bruno first.
Okay, thank you, Gloria. I think in terms of the industry and also as asset managers, we are seeing the ESG agenda to be more and more important. To quote one example, the recent Hong Kong Investment Fund Association survey in conjunction with KPMG to survey our member, we find out that 89% of our asset management firm member indicated that it's become more and more important to come up with the ESG agenda and to come up with the product, and the demand is growing. Initially, we see that the demand are mainly coming from the institutional side in Asia. But more and more, I think even for last year, starting from last year, we have started to hear about like even retail fund distributor are asking for ESG focused fund. And I think a lot has to do with the kind of the risk or the ESG related shock that people has been seeing in terms of kind of the global kind of a product regulatory change related to ESG, and then causing product recalls, supply chain disruption, pollution incident causing loads of kind of penalties and money of the listing company or debt issuers, and also accounting fraud. So some of these issues has becoming a real kind of a threat from the investment point of view and the risk management point of view, rather than just a feel-good feeling. Kind of historically, people may think kind of it's good to have a certain value in their investment. So I think this is definitely becoming more and more important in Asia, from both institutional and now trickling down to even the retail distribution as well.
Thanks, Bruno. Next we have Gabriel. What's your view around the ESG investment vibe in Asia and in Hong Kong?
So I completely agree with Bruno's comments in that I think what we've really seen is almost a tidal wave of focus on ESG. And I think that there's a few things that are contributing to this. So at one side, we've got a clear policy direction from a lot of governments within the region around sharper enforcement on environmental issues, on increasing disclosure requirements, and more data has provided more ability to actually evaluate and assess companies. So I think that we're on a virtuous cycle of a few different things contributing to further growth and development. The other really important angle is the mainstreaming of ESG and a shift from a values-based approach or philanthropic approach to ESG investing to much more of a fundamental risk mitigation approach. And within Asia, this is a critical issue, especially because if we look at 2019, there was over 150 billion US of natural disasters and damage globally. And if we look at only a third of that was actually insured. So there's a huge amount of destruction that goes on. And the top 5 events globally for natural disasters were all in Asia. And so what we see within the region is huge exposure to these issues. And increasingly people are seeing climate change, natural disasters, plastics, corporate governance scandals as being a real risk to their wallet. And so as this becomes a more and more obvious part of value creation or value destruction, we're seeing more and more demand for assets and funds which are explicitly taking into account these considerations in their investment process. And so from my perspective, we've seen huge growth, and I think that we're likely to continue to see this growth. And another reason why I think it's likely to continue is that as we see increasingly the next generation taking control of family offices or having a larger influence on family offices, we're seeing more and more capital being deployed towards these types of investments from younger investors. So it looks like even though it's seen rapid growth, we're only at the start of probably a multi-year or multi-decade trend of increasing focus on ESG.
Thanks, Gabriel. It's great to hear that there are so many enthusiastic market players in Hong Kong and in the region, and with such rising interest in ESG investment across the Asian investment community, different ESG principles and guidelines will likely be increasingly relied on. So we have James here today. As PRIs, being the world's leading proponent of responsible investment, how do you think the overall landscape of the ESG principles and guidelines would evolve in Asia?
Thank you so much. And first, let me say, I think the PRI really welcomes the FSDC report and the recommendations made there, and particularly the recommendation around the development of an ESG policy roadmap for Hong Kong. So we really appreciate and welcome that. maybe to take a step back first, because when we talk about responsible investment, you know, we always are kind of more mindful not to try and approach it from a compliance-based mindset. The benefits, and obviously at the same time potentially a drawback of responsible investment, is that there is no one way. And so the really responsible investment is kind of this umbrella for a number of different strategies that investors can look to take. And so there is quite a lot of flexibility within that, I think, for investors across different regions and markets to look at responsible investment strategies, practices as they've been applied across different markets by other investors, and implement them in a way which is best suited for their own circumstances, strategies and responsible investment approach, whether they be in Hong Kong, Philippines, Thailand, etc. So really we would say that we don't see responsible investment as being a very rigid structure or clearly defining what is and isn't responsible investment. And so that can have some benefits here. Certainly what we're seeing from regulators is they're not looking to be overly prescriptive when they are regulating in terms of saying exactly how investors, for example, should do responsible investment. With that said, I mean, echoing what Gabe has mentioned, we've seen the landscape very quickly evolving. We're seeing similar developments across a number of markets. So influential local asset owners embracing responsible investment, incorporating these requirements into manager selection, appointment and monitoring. So HKMA, EPF in Malaysia, MPS in Korea, GPS Thailand are just some examples, and they're really helping to drive this at a local level. Regulators increasingly active, and stock exchanges, as Gabe also mentioned, looking to review and strengthen ESG disclosure requirements, which is giving access to better data. So all of these drivers are helping us move towards that mainstreaming of responsible investment. The implication being here that all asset managers in the future will be expected to have a developed and structured approach to ESG incorporation. You know, for example, at minimum, having a responsible investment policy in place. And so I think that's, again, with Asia and Asian investors, where we'll be moving towards as well. We're seeing this move beyond listed equities, so an expectation that your RI approach is able and covers across asset classes. So really we're starting to see strong interest in fixed income in the region here for ESG incorporation, but also huge opportunities in real estate, infrastructure and private equity aligned to sustainability or ESG investing as well. So these are just some of kind of where we're moving towards. There's another 2 or 3 areas I think that are going to be of particular relevance for the region. As has been mentioned, climate change, we're really seeing regulators start to pay attention here. And so we may in the future for asset managers, they may be required to integrate climate factors into their investment and risk management processes and to disclose that. MAS have issued a consultation on environmental risk management for asset managers, insurance and the banking sector, and SSC is formulating its regulatory response to managing climate risk, so may also look to include this. So with this, there's going to be a much greater requirement on investors in the region to have a structured approach to climate change, climate risk management. And I think from this, TCFD will gain further prominence and adoption as a key part of this approach. Another area is on stewardship. This is an area we see is particularly underdeveloped or underutilized in Asia, yet at the same time, we've seen a proliferation of stewardship codes. Many of these having been revised in the last year or two in line with the UK code, which expressly references ESG and sustainability. So this includes Japan and Taiwan. India this month launched a mandatory stewardship code for investors in Indian listed equities. So alongside the climate change requirements which may come in, which may also reference engagement expectations, we're also going to see strengthening of stewardship codes. And so stewardship and active ownership will become a much bigger part of the responsible investment discussion in Asia as well. There's a lot of other trends we're seeing at a global level that are really going to have an impact in Asia. So discussions around taxonomies is something that's likely going to be unavoidable in Hong Kong and other markets. We're already seeing discussions between EU and China on alignment. And we're also going to see much greater needs and for clarification around product labeling and the disclosure requirements that are expected around that as well. So there's a lot happening and it's very, very exciting. As the others have mentioned, we expect this momentum to grow. But it's hard to give a lot of specifics as to where we'll be because there's so many interchanging dynamics in play here.
Thanks, James. I can see the excitement totally, and it's good to hear that the ESG investment is becoming mainstream in Asia. We hear that the demand for ESG investment is already here, not only in Hong Kong but also across the region. And we also see a lot of latest developments around the principles and guidelines to facilitate ESG incorporation. So the other side of the equation is naturally the supply of the ESG investment. Like, do we have enough investment products ready? Are investee companies well equipped to remain appealing investment targets? With this, I'd like to first focus on the ESG investment products first. I understand that our Hong Kong Green Finance Association interacts with all sort of financial institutions, including intermediaries, investment products owners, etc., very regularly. So, Chaoni, do you see an increased interest from these institutions in placing more ESG products onto their shelves, like green bonds, ESG funds, etc.? And why do these institutions choose to do so in Hong Kong?
Mm-hmm. Great. It is very encouraging what we are seeing in the market on both the demand side and the supply side, of the equation. Very often people would hear I say, for sustainable bonds, for example, which is a classic or more of the well-known ESG product, right now. It is a demand-driven, environment where investors, in particular ESG investors, are chasing the few sustainable bonds being, launched, in the marketplace. So if we look at the 2020 year-to-date supply, it's about over 197 billion US dollar equivalent in sustainable bonds, and that's 36% higher than the same time last year. So in terms of total outstanding, we are really close to $1 trillion mark, which is something that we should celebrate, looking at the success of the green bond market or sustainable bond market. But I honestly think we are only scratching the surface, Certainly there's, good momentum when it comes to green loans and sustainability-linked loans, but there's just so much more, when it comes to sustainability integration across the full suite of offerings. If you think about, the banks or the sort of instruments available, for example, credit guarantee, hedging solutions, structured solutions, to equity capital markets, to M&A advisory. I don't think these areas have really tapped the opportunities when it comes to sustainability. So that means, there's a lot of room for us to grow while we are celebrating, the success of the whole, the bond space. So I think there's so much more that we can do. Certainly there's a lot of, tangible benefits for companies to do these sort of instruments. Cost of capital is one of the area that many of them do pay attention to. We're talking about diversification of investors, within their pool. We're talking about, really increasing the competitiveness, which is something the other speakers, talk about earlier as well. So it's organically linked, together when it comes to sustainability. So I feel, it's growing, from strength to strength, but we're just scratching the surface.
Thanks, Chaoni. Now, turning to the investee companies. What investors generally look for is companies' ESG disclosure of good quality. We often hear companies in Hong Kong saying that, they have started their ESG journey, but the challenge often is how to carry it on in a meaningful way. So especially now that with the economic outlook becoming less certain, it may get more difficult for them to convince their boards to provide resources on addressing the ESG matters. So Pat, in your capacity at KPMG, I understand you have advised different companies and the boards around this. Can you share with us how and why ESG should continue to be taken seriously, even during the trying times?
Thanks, Gloria. I think, in the past year or so, I've seen a number of corporates, sizable corporates in Hong Kong. I think, you know, previously not really worried about their ESG ratings that has been given to them by the rating agencies, and then really realizing what's going on. And they were prompted to look at it by their investors, by their bankers. So I think that, you know, as we've mentioned throughout the presentation, it is really in that capital allocation space now. It is about the investors, it is about the bankers, it is about the insurers. And every single company out there needs capital. And the readers of the report are those finance professionals, that research analysts and all of that. Those are the users of the report. If you think that you can just kind of like write a bunch of stuff about, you know, going out to BBQ and all that kind of stuff that we've seen, you know, in these reports, you know, what does that tell you about the company? It doesn't really say anything. So, you know, I think that you have to really tailor your report to the users, which is the financial professionals, and they are going to use this to allocate capital. And you know, if this is not done well, as Chaoni has mentioned, the cost of capital, I think, will be going up for people who do not look at this space. So I think that, you know, I think previously what was happening was, you know, people going up into boards and talking about carbon footprinting and, you know, all these kind of things, and climate change and all of this, which was really kind of like foreign to the majority of the boards here in Hong Kong. But when you're talking about capital and why these things, carbon footprint, and affect your capital, cost of capital, they'll understand that. And in any case, I mean, ESG is a runaway train, is the way that I see it. The train has left the building and it's going, you know, you're not going to be able to stop it. You know, it's just going to be more questions from investors, more questions from bankers, more questions from insurers. And are you prepared? Is the question. So I think that I would encourage everyone to take this seriously, take a fresh look at it. It is not just kind of like changing light bulbs and buying an electric car, which some big corporations are still thinking is that. It's so far away from that now. We really need to look at it from a capital basis.
Thank you, Pat. So writing on this challenging times topic, it actually comes to my last question, as I see the Q&A box has other questions, which I really hope the panelists can address as well. So my last question is actually for Bruno, Gabriel, and James. We've heard from Pat about why investee companies should not put aside ESG, even during the tough times. And so how about the investors? Has the pandemic or the overall economic outlook indeed cooled down investors' passion in adopting ESG investment? And if asset managers or asset owners are still keen to develop their ESG investment portfolios, are there any key areas they should be mindful of? Gentlemen, who would like to start first? Maybe Bruno?
Okay, sure. Yeah. Okay. Thanks, Gloria. I think the pandemic, COVID-19, is not going to slow down or change the direction. And the reason for that is, as we have now hearing about the news in the flood in mainland China, and all these things caused by, you know, partly climate change and other reasons. But I think from a investor point of view or asset manager's point of view, it is important to see the ESG trend and keep on investing more resources and to come up with the integrated approach in investment, going back to the fundamental research, credit analysis. It is important to really understand, you know, for the underlying company that we choose and invest in, is not paying lip services, you know, kind of trading carbon, you know, kind of a quota, and they think that's the job done. It is really deeply integrated in a whole kind of a business strategy, the whole management process, according to their respective industry and the company. supply chain management and some of the policy to ensure that the company that we can choose and invest in are long-term sustainable quality company that can help to deliver better return for the investor at the end. So I think kind of going through this current challenge definitely is not going to change the overall trend, both in terms of the demand of these kind of ESG product from investor point of view, institutional and retail customer point of view, but also in terms of the fund managers as an investor. And clearly, the help from regulator to harmonize, I don't think we can ever standardize, the global kind of requirements for ESG, but I think some sort of harmonization, I think will be very helpful. The data quality, I think there are still room for improvement so that, we're working on a common standard and understanding. And I think one other thing which is very important is the education of the end investor, whether institutional or intermediaries or retail investor, for them to really understand the benefit of using ESG as a integral part of the asset management process and to select the product. Obviously, we don't want ESG to be like a cliche, like, .com thing, kind of back in year 2000. But there are real substance and benefit for people who are choosing this product, and there are very well-defined process. And that in itself, I think, as Pat mentioned, will impact the listco, whether they are issuing equity or they're issuing debts, because the cost for capital is there. And if they are not taking it seriously, and that will eventually, kind of impact their potential kind of downside risk and the performance of the company earnings compared to the other peers who start to invest in the ESG for the long term. I think that will be a message that we want to get it across.
Thanks a lot, Bruno. Before I turn to Gabriel and James, because we're asking about the investor perspective around this. I also see a question in the Q&A box which mentions about the important role of pension funds and how important it is in promoting sustainability and responsible investment and so on and so forth. So if gentlemen, you can perhaps incorporate the pension funds angle as well, that will be great when answering the questions. Gabriel, would you like to give it a try? Not necessarily around pension funds, but investors in general, as in how they feel about this recent economies towards its impact on ESG investment.
Yeah, sure. Sorry. Apologies, just having some connection issues here. But if we look at the question from the perspective of both pension funds, but then general investors, I think that the piece on pension funds is fascinating because it ties back into James's earlier comments around the importance of pension funds in driving the ESG agenda. And so especially when there's a link to the government, they can actually help drive government policy and really broaden and deepen the focus on ESG. And we've seen fantastic examples of this in Japan, in South Korea, in Malaysia, in Thailand. We've seen a lot of these sorts of examples. And for me, I think that the other really interesting side of this is where the pension funds are being driven by their own beneficiaries. And this is more a story coming out of Australia and Europe and other parts of the world. But what we've seen in Australia is that every pension fund now has to have an ESG product, not because it's mandatory, but because all of the beneficiaries are asking for them. And so that can also be a really strong catalyst to drive ESG adoption and growth throughout the entire ecosystem. If we look at COVID-19 specifically and the pandemic and the role that that plays on ESG and how asset managers have responded, I would actually argue that it's almost accelerated the asset manager focus because what it means is that the impact or benefit of ESG investment has become more obvious, with ESG funds outperforming over the first couple of quarters of the year. So again, you're seeing a direct benefit from investing in it from a very tangible financial sense, but also areas around inequality, around health, front of the newspaper every day when you open it up, no matter where you are in the world. And so I think this is also helping, from a beneficiary or client perspective, really increase the demand for some of these products and make it seen as a real fundamental part of investing. So from my perspective, I think a lot of these different pressures and dynamics are likely to continue the growth and development of ESG. So it looks like a multiple pronged approach of really driving and furthering growth from where I'm sitting.
Thank you, Gabriel. James, do you have anything to add?
Yeah, I mean, I think I'd second a lot of what Gabe mentioned, and certainly from the PRI's perspective, both in terms of the discussions we're having with our signatories, but potential signatories, and anecdotal through engaging with other stakeholders across the market. We're really seeing this as being encouraging further reflection on in terms of what's happened during the pandemic, how companies and investors have responded, and also taking it as a time to take stock and to review. And this is kind of further giving further momentum to interest in responsible investment as well. What I say is we are seeing a reflection in terms of E, S, and G themselves, and what are the issues investors should be focusing on. And perhaps we've seen there are some particular S issues which have been overlooked. And so I think the broader responsible investment industry is reflecting and having to kind of reevaluate some of these often very valid criticisms in terms of how responsible investment looks at issues like diversity, for example. So I think that's been one part, and that differs by region as different social issues and factors have become more stressed, whether it's been in response to COVID or other dynamics as well. So I think certainly we're seeing momentum increase, but also a reevaluation in some aspects of responsible investment. And in terms of, I think the pension side, Gabe mentioned it really well. We've seen in a lot of markets, the government-linked pension funds really taking a strong leadership role in driving this. I think when it comes to Hong Kong and the MPF scheme or MPF setup, we would really like to see the MPFA and the government taking a much clearer role in defining how these schemes should and can look at ESG incorporation. So I think we're definitely in agreement with Gabe and the sentiment of the question itself in terms of the role and value of pension funds.
Thanks a lot, James. I also see that Joseph, Under Secretary for Financial Services and the Treasury, wants to add some points to echo to the question around pension funds. While we are trying to do the setup, oh, good, we see Joseph here. Joseph, understanding you have some points to add as well.
Yes, thank you, Gloria, and thanks for the panelists. On this, I just want to share a few points. First of all, definitely, from the government level, we would like to encourage the MPF trustees and the investment managers to take the ESG standards into their decision-making process and consideration. So in fact, MPFA has issued a circular on that note to encourage them to take ESG into consideration in their investment decision, and also encourage them to disclose their approach to ESG factors to the scheme members. And of course, the circular has been issued, has been done, but that's not the end. On an ongoing basis, we will continue to work with MPFA, the regulator for MPF, to push for a more ESG element in our MPF framework. The second point I would like to share is that as you know, in Hong Kong, we have the HKQAA, Hong Kong Quality Assurance Agency, which provide green finance certification. As early this year, they have officially launched the green finance certification for funds as well. So we hope this will also help push the green fund development in Hong Kong. The last point I would like to share is that I think is that in general in the industry, we see that investors look into ESG funds not only because they like ESG, but also they believe that a company successfully push for ESG is also a good demonstration of good corporate governance. And they kind of relate the performance of the investment, they kind of relate the performance of the management of a company to how successfully they can implement ESG as well. So I see that it's very encouraging, and I think in general, we see a converging trend that green ESG investment performances have all been considered collectively by the investor arena as well. And of course, from the government level, on the regulatory level, we will continue to do make effort in multiple fronts to push that forward. Thank you.
Thanks a lot, Joseph, and thank you so much for all the panelists we have. Thank you, Bruno, Chaoni, Pat, Gabriel, and also James. We actually see many other interesting questions in the Q&A box, but we cannot address them all due to the time constraint. Once again, thank you for joining with today's webinar. Thanks for staying with us. I hope you enjoyed this online event. And in the coming months, the FSDC will organize similar webinars on other equally important topics. So please stay tuned, and in the meantime, keep safe. Goodbye and have a very good evening. Thank you everyone.